What's up, traders? Andrew O'Connell here with Pristine Capital. Welcome to your market recap video. It is August 29th of 2022, another big down day in the market. Box scores, we had the S&P 500 finishing down 0.66%. We had our NASDAQ QQQ finishing down 0.99%. Our IWM small caps finished the session down 0.92%. Our dogs of the Dow were down just over 0.5%. And our ARK Innovation ETF was the biggest loser, down 1.66%. We finished out with up volume of only 32.5%, and the trend model remains at a -3. And this was after a huge extended range, big old red candle on Friday. The market attempted to bounce today, and it really could not even manage to bounce. So let's dig into the sectors and see what happened here on our heat map. We can see that the semiconductors, they have been one of the leading groups, right? There's been really nice names like GFS. NVIDIA reported horrible earnings and still rallied on those numbers. Names like RMBS, PLAB, some very nice leading stocks in that group. But the group is beginning to fall apart. The only group that really showed some nice relative strength was energy. And we know that this kind of configuration where energy is rallying but everything else is still kind of selling off, this is characteristic of the bear market that we were in really for the first 6 months of the year until that summer rally kicked off. So it is important to note that this environment has shifted a bit. This is actually key. We'll talk about this in a moment. Sectors. MSOS, the cannabis group, continues to show some nice strength. It is at the top of our momentum list, and we finished out 4.46% for those cannabis names. Of course, energy is in our number 2 slot, and the KWEB Chinese Internet ETF is in our number 3 slot. Which areas of the market held up very well? Utilities were up 0.3%. You can see European financials as well. Other than that, still another day of red price action. Style factors we had. The quality style factor down 0.97%. And high beta was down 0.98%. I would imagine that quality style factor is likely where a lot of players are hiding out. They'll go into those names like the NVIDIAs of the world, the Apples of the world. And so the fact that those are getting hit, it really shows there are some players that are experiencing the pain right now. Now let's take a look. Heading into tomorrow, let's just set the table with this. We've got our European inflation data coming out. I'm sure there's a lot of traders that really do not have this on their radar, but it's very, very important. We have inflation data for Spain coming out at 3 a.m., so set your alarm. No, I'm kidding. I actually might just tune in for that 3 a.m. release and see what happens. The previous reading was actually negative 0.3%. The consensus is looking for an actual inflationary move plus 0.25%. And then we have German data coming out at 8 a.m. Eastern time. And take a look. The previous data point was plus 7.5%. Consensus is looking for a plus 7.8% reading. That is massive. And this is going to be really interesting. That's the year-over-year data. Year-over-year is a lot less important. Month-over-month. The previous reading was plus 0.9%, and the consensus is actually for a slowdown. So the consensus is looking for plus 0.3%. Now, this is the risk heading into tomorrow's session. It's a complete binary event. If those numbers come out looking really good and deflationary, we could see a big overnight gap higher, right? Conversely, if the German data comes out, way too hot, and it's above the expectations, we could find ourselves in another gap down scenario like we found ourselves today. So let's take a look at these indices and just see where we are at from a technical perspective. The trend model is still at a -3, remember? And I drew on these trend lines. I think it's, I always like drawing these as soon as we find ourselves in a downtrend. And our overheat model triggered on this candle right here and sent us out a sell signal on 8:15, and we've been pretty much out of the market and net short the market ever since. So take a look here. We did tag this 50-day simple moving average, and we did have some major overnight weakness. The market was down, well over 1% at one point, and we attempted to rally off of the lows. And so I was seeing some indicators, like for example, like the VIX. The VIX really could not remain bid for today's session. And you can see the VIX kind of faded off, put in a red candle. This is definitely a start. This is for sure what we want to see. But the VIX still closed out positive. And take a look on our dollar index. Dollar index, again, this is kind of a good scenario where overnight the dollar index was rallying, super bullish, right? And then we ended up putting in a red candle, but the dollar index still, this is too ambiguous. Where if anything occurs, we could get the dollar index just breaking out to the upside. We did also have some weakness in the treasury market. Treasuries were down, about 0.5%. These 10-year treasury futures, that is certainly not what you want to see if you're bullish. These treasury futures, they've given back a lot of the gains that they made over the summer. And of course, we did have our 30-year futures. These were also down pretty big on the session. So a lot of these indicators, we got very aggressive on the short side. I think it's tough to be as gung-ho on the short side, and I actually flipped to a net long exposure today. But, the trend is still to the downside. So, honestly, I think really the players that are in trouble are if you're a long and, let's say you were long at 420 on the S&P 500, I would imagine there's still some players that are underwater. Those are the players that really have to, be careful right now, because if these inflation prints come out a little bit hot, I wonder how many stops are under this 50-day simple moving average. There's likely a lot of liquidity down there. So if we get anything negative, could we undercut it? It is definitely possible. And I want to be an aggressive buyer if that happens, at least for a short-term scalp, something of that nature. Let's take a look at these other indices. We have the NASDAQ, which was, this one finished, right on top of that 50-day simple moving average, and right above this monthly value. Where we also have to remember, we discussed this in our Pristine Capital weekend market analysis. We're approaching month end, and there could be potential negative flows for month end. So by no means are we out of the woods. The Russell 2000 getting pretty close to that 50-day simple moving average. And our dogs of the Dow finished out, pretty much just on top of that 50-day SMA. Now, crude oil ripped to the upside. Look at this. So crude oil is up at $96 a barrel, and we are testing this monthly point of control as well as this 50-day simple moving average. So we are running into overhead resistance. So that is important to note. Just that, are we at the beginning of this crude rally or the end? It's really tough to tell. So I think when the market gets this complex and this tough to interpret, trend models at a -3, that's when I don't really want to be making all-in bets, anything like that. It's super important to recognize the best traders in the world. It's not oh yeah, they can interpret these crazy market scenarios and they know exactly what's going to happen next. Honestly, it's just the best traders in the world, when the market gets super difficult, they just don't try to fight it. And they don't really try to make an all-in bet. It's all about waiting until you get that fast ball up the middle, and that's where you really want to take a big cut at it. So let's go through my trades for today. Let's check this out. So options. We actually closed out the remaining 25% of our S&P 500 put options on the open. So we closed those out for $13.55. We had paid $4.69 for those. That is almost the triple on this trade. And this one was, it was a large trade as well. So this really, really helped, where we actually, made profits during Friday's downturn. It was incredible. Honestly, super blessed to have had that trade. But then we did have some unforced errors as well today. So we got long the ARK Innovation ETF, October 21st, 43 strike calls. To be honest, I got a little bit head faked. I was looking at the MOVE index and I was like, oh my gosh, bond volatility is coming down. If that's the case, bonds are getting hit, but bond volatility is coming down. We could be getting a bounce in bonds. That's great for the ARK ETF. So I ended up taking a position there. I closed out the remaining half of my VIX November 25 strike calls for $4.64. I paid $4.10 for those. This was another hedge that we had on the books. Um, and then I also got long these TLT, which is long-term treasuries. These are January 20th, 112 strike calls. But to be honest, I did get a head faked. This move index, this is kind of BS. Take a look at this. So the move index, we'll go to TradingView and I'll just show you what I mean. This thing is a measure of bond market volatility. But the problem is it is not updated in real time, which is actually very disappointing. So I looked at this chart earlier today and all it was showing me was this. So it was showing basically like I saw a red candle and I thought it was today's candle. And I was like, oh my gosh, bond volatility is like really coming down. This is great. Then all of a sudden, like 10 minutes before the bell, it just flipped to plus like 5% on the move index and a new candle appeared. So I was like, what the heck is up with this thing? And, that completely head faked me. So I ended up being like, well, if bond volatility is not coming down, that sort of invalidates that ARK thesis. So I ended up taking off those ARK call options. I took them off for a 355. I had paid 370 for those. And just wanted to really just, undo that mistake. There's no point in taking an aggressive position like that into these inflation prints that could end up, turning out negative. So I just wanted to correct that error. In terms of common stock trades, I did take a long position in DQ, and I'm already long call options in DQ, and those are doing pretty well. So averaged into that over a couple of increments. This TQQQ common shares position, this was also off of that thesis that, oh my gosh, the move index is coming down. And I also unwound that in the after hours. I had paid $29.60 for that, unwound it for $29.21. So yeah, I was like, you know what? I wrote here, we weren't able to balance into the close today. And if that European inflation data comes out hotter than expected, we could end up getting some capitulation tomorrow. And honestly, like I want to have my buying power if we get that capitulation. So yeah, sometimes it's tough. Like you put on a trade and it's like the ego kind of gets involved and it's like, I don't want to admit that it was a mistake or whatever. But, for me, this was literally like a data error. Like I looked at the wrong piece of data or like misinterpreted it. So like, yeah, I was like, you know what, that thesis, like it just kind of flew out the window. So we'll see. Tomorrow is a binary event and anything is possible. We could end up getting that huge gap up, huge gap down, but it would have not made sense for me, like with my trend model at a -3, like, oh, let me try to catch an overnight bounce. And like, it's literally a 50-50. Doesn't make sense. That would be a complete punter move. So even if we do get the gap up, this was still a good decision to correct that because this is really using, proper process. And it's the kind of thing, if you're punting ahead of binary events, it might work a few times, but to be honest, it ends up catching up with you. And there's no edge there in doing that. So yeah, I ended up getting everything back in line, which is good. And now it's all about looking out for these inflation prints that are going to occur overnight. So with that, today was kind of like a weird day. If you chase the strength of the market, you likely ran into some issues. But we'll have to see what happens tomorrow. We're in a downtrend. We have the Fed's QT program that is going to be picking up steam in September. So honestly, if you don't know what's going on in the market and you think that things are unclear, that is perfectly fine. If that is the case for you and you're like, man, I'm just not seeing this clearly, I don't know what the heck is going on, honestly, you could probably take off the month of September and you're going to be just fine. Honestly, if the less trading you do in September is likely going to benefit you. All right, everyone, have a great night.